The unexpectedly dovish Fed minutes released overnight have seen a major sell-off in the US dollar. And whilst that lifted US equity markets, much of that has not carried over into the Asian session. Indeed, the collapse in the US dollar saw dramatic purchasing of the Japanese yen. Indeed, during the intra-session today, we saw the Japanese yen or the USD JPY rate plunge through that key 100 level, fueling speculation that maybe the Bank of Japan or the Japanese government would be forced to some sort of action. Australia and Japanese markets have definitely been the two worst performers in the Asian session, but over in Hong Kong and China, we have continued to see those markets push for further gains. The big economic data point out today was the Australian employment figures for July, and we saw an unexpectedly stronger number in new jobs created than the market was expecting. But of course, within that, there has been a further collapse in full-time employment. And whilst part-time employment continues to see the headline figures hold up quite well, that collapse in full-time employment is really weighing on the central bank and their considerations about weak wage price pressures having no effect on moving inflation. And the RBA is quite likely to look at those job figures and not be too happy and perhaps cut rates further over the coming months. Nonetheless, that strong headline figure saw the Aussie dollar surge about 0.6% and back above that key 77 cent line.